Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very good weekend and a very good day of trading as well. And in today's markets, guys, the bulls continue their march forward. As a matter of fact, guys, this is the fastest V-shaped recovery that we have had in 4 years of trading. You would have to go back all the way to the depths of COVID, April 2020, to find a similar time where you had price action such as this. A very steep and quick drop off on the SPY of roughly 8%, and then a complete V-shaped recovery in just about 7-8 days of trading, over 9%. This has not happened, guys, since 2020. The fastest one since then has been last fall, right, in October, where we had a slight decline here of about 6.5% in about 7-8 days of trading, and then recaptured it in as many days of trading, about 7% to the upside. But this V-shape, guys, really takes the cake and just goes to show that bulls are still strong and do still maintain overall longer-term time frame control of these markets. That's why the buy the dip community is so strong. So in today's video, guys, we're going to go through a few things together. Number one, have one earnings prepared for you guys, and that is going to be Palo Alto, which reported earnings after the bell today. And then after, we're going to take a look at our major technical analysis rundown of our major stock market indexes, followed by our big tech names, see if there's still some good deals to be had in the market in big tech right now. And then lastly, guys, take a quick glimpse into my portfolio for a few of the opening trades made today. So without further ado, guys, let's get right into today's video. So SPY up a very healthy 0.96%, QQQ up an even healthier 1.31%, and the broad market rally continues here, guys. Not many sectors were left behind today at all. Take a look at your big tech names. Most of big tech was to the upside. Semiconductors, another roaring day of performance, led by the most part NVIDIA and AMD to the upside. Very nice gains there as well. And the bottom half of the market, guys, financials, healthcare performing well, and even your more defensive names also performing well. Really, we'd be hard pressed to find any red points in the market today. Take a look at your one-day relative as well, and you can see that even better. Every single sector in the market was green today. And on a 1 week relative, guys, well, we know that the bounce has been quite legendary. Everything on the 1 week is green. And on the 1 month, guys, there's still just a few sectors being left behind in this rally in terms of the 1 month relative performance. That is energy, communications, and consumer cyclical. And the rest of everything, guys, has finally come back. Even technology, and technology was a big one here, guys. The SPY now only a short percentage away from the all-time highs after just about a week and a half ago being down 10%. And the QQQs as well, guys, not too far off the all-time highs, just about 4.5% after being down about a week and a half ago, all the way to about 15.5%. So it's been a very fast and speedy recovery, that's for sure. But as we always say on the channel, guys, we are going to take this one day at a time, and we do not want to be chasing this market. We want to be waiting for a little bit of a slight pullback here to get us better pricing, not only on the indexes, but also on individual names, especially big tech, right? We obviously know that there's still a ton of value names that are well off their all-time highs. But in terms of big tech, those two are off their all-time highs, but I would be very hesitant in chasing this rally. I am more of the mindset of waiting for a pullback and then going shopping accordingly. So before we get into more technical analysis, guys, let's jump into our earnings for the day, and that is going to be Palo Alto Networks. So Palo Alto Networks coming in with their earnings after the bell today, and you can see they're up roughly about 3%. Now, it was a very tumultuous time in the after hours. As you can see, initially, they went down pretty much 6%, then all the way up 6%, and now pretty much back to only about 3% gains. The expected move on Palo Alto was about 9%, so this is somewhat underwhelming in relation to how much they usually move. But a very good quarter for them, guys. We're going to jump into that right away. So take a look here. EPS beat by about 7%, and a revenue beat by about 1.25% as well, and their guidance was very, very good. Now, a little bit of context, right? In terms of what we have been looking for in Palo Alto. So about 2 quarters ago, guys, Palo Alto Networks started what it calls platformization. And that essentially is simplifying their cybersecurity offerings. Obviously, you know, there is so many different facets in cybersecurity, whether that's preventing external attacks, whether that's putting up firewall prevention, and so many things in between, right? You can obviously go through a lot of these companies' earnings, and you will see that each of these companies have anywhere between 10 to 20 different cybersecurity products. So for a lot of their clients, it's a bit of a cumbersome endeavor, right? To really understand what the company is offering and what you as a client may need, which is exactly why Palo Alto Networks chose to simplify their products. At one point, they were advertising over 18 different products, and now they have pretty much got it down to only 3 products that they call distinct platforms, and it just simplifies their offerings. And the goal for that, guys, was to increase sales because now the products offerings are simpler and they all include a lot more different things, and also to switch from some of their products were one-time revenue items, right? Where you would just buy the software or the protection once, and then that's it. Now they are pivoting to an entirely subscription and annual recurring revenue model. So that has been the company shift that we've seen over the past 6 months. And so far, it is going quite well for them as well. So moving on into their earnings, guys, let's jump into it. So very, very healthy quarter for Palo Alto. Nothing bad to say. Fiscal fourth quarter revenue grew 12%. That's in line with roughly their longer term averages now, growing revenue between about 12 to 15% per year. Fiscal year 2024 revenue as a whole grew 16%. Now, I know they say 2024 ending, guys, but just remember a lot of these companies run different tax years versus the actual calendar year. But for all intents and purposes, just understand that this means that they just wrapped up their fiscal year, right? So 16% growth there. Next generation security annual recurring revenue grew 43%. That is absolutely fantastic. That is just a byproduct of the business model pivot that is working very well. Remaining performance obligations grew 20% to just over $12.7 billion. That's basically how much Palo Alto's has in terms of deals in the pipeline right now. And as you can see, the company roughly brings in about $7 billion a year. So for them to have just over $12.7 billion in the pipeline, that's just over a year and a half worth of revenue. That's still to come for Palo Alto. So very, very healthy numbers there as well. Now, their net income for the quarter as well was 16.2%. That is fantastic, guys. That is one of the best net income numbers that Palo Alto has ever posted as a whole. Take a look here. Prior to last year, they were really net income negative as they were growing their business. But you can see here in the past 5 quarters, they have been profitable, and not only profitable, but their profitability is growing to the upside. Last quarter was about 14%, and this quarter is pretty much one of their best ever at 16.2%. Very good quarter for them. Here's what the CEO had to say. We finished off the year with strong execution on our platformization strategy in Q4. As we look forward to fiscal year 2025 and beyond, we are focused on scaling our next generation security business through continued innovation and execution. So apparently the platformization strategy is working because it's contributing to higher net margins, higher operating margins, and very decent revenue growth, especially in your annual recurring revenue subscription model growth. So here's our guidance for the next year. For the fiscal first quarter 2025, so here is the next quarter, revenue growth of about 12 to 13%. That's very standard, and a nice little EPS growth of about 7 to 8%. Now, for the full year, here's their guidance, 13 to 14% revenue growth. Also very standard, no exponential growth numbers to the upside, and also not lower than the expectations, and EPS growth of about 9 to 11%. Very healthy revenue and EPS growth, in my humble opinion. And the board of directors authorized an additional $500 million for share repurchases, increasing the remaining authorization for future shares to about just over $1 billion. And they definitely need it here, guys, because Palo Alto's shares outstanding have been increasing, right? They have not been doing any buybacks because they really haven't had any positive, meaningful free cash flow numbers prior to the last 2 years ago. So most of this dilution comes internally, guys. It's pretty much stock-based compensation that gets paid to employees and management, right? It's not as if the company's issuing more shares to the public. This is pretty much just all internal dilution right here. So interesting to see that they've upped their ante for their share repurchases, and hopefully to see some of those repurchases having an impact within the next year of trading. Now, moving on down, guys, here are their 3 platforms: network security, code to cloud, and the autonomous SecOps platform. The reason these are important, guys, is because now we're going to go through a few of their earnings slides, and you can see how important this platformization is for them, right? So now they're at over 1,000 total platformizations for the clients. They need to get about 2,500 to 3,500 platformizations to get to their 2030 target of $15 billion in annual recurring revenue. That is 2 times their sales numbers right now. So they're trying to 2x their sales numbers over the next 4 or 5 years. So very lofty target, but should also be a target that is achievable for them. Now, moving on down, let's take a look at some of their lines of business, right? So here is your first line, the network security platform, and you can see it's moving very, very well, right? Very nice increase in customers, up 21% year over year. Extremely strong numbers for them. Very nice client growth there. Now, in terms of their second line of business, the code to cloud platform, which they call it, you can see a few of their other highlights right here. So over $700 million in annual recurring revenue right now, and over 30% year-over-year growth in annual contracts. So that line of business is also performing very well for them too. Now, in terms of their third line of business, the security operations platform, that as well, guys, has been growing very well for the business. 6,100 active customers in there, over $150,000 in average recurring revenue per customer. So a very high profit margin business right there for the company, and very nice overall new bookings too. Take a look at this, guys. This is their security operations one, has been performing beautifully as of lately, and the metrics are right here. So before they implemented their XSIAM platform, as they call it. This was the reduction in the amount of median time to resolution. So whenever they have a potential conflict or an issue that they have to resolve for a client, before this implementation of the XSIAM, they were having to resolve those conflicts in 2-3 days. Now it takes as low as just under 1 minute. So very, very, very strong right here. You know, over 50% of clients who have deployed this service so far have the median time to resolution now under 10 minutes, down from a couple days. So very good, guys. They're adding value in every single one of these lines of business. And you can see they have very good leadership in across their different lines of business right here. There are 3 platforms. You can see that in the network security, they have 9 products that are leading in their category. In cloud, they have 8. And in the SecOps platform, they have about 7 that are industry leading services. So very, very strong numbers from Palo Alto Networks. Nothing truly bad to say about the company. Let's go over some of their highlights right here in terms of the valuation. So in terms of the valuation here, guys, nothing bad to say about the balance sheet. Look at all this nice free cash flow as of the last 2 years, really been increasing that in a meaningful amount and reducing debt in the process. So now, not a lot of debt on the balance sheet, can definitely manage that with the cash that they have on hand right now and the amount of free cash flow that they generate on a yearly basis. Take a look at their growth prospects as well. EPS, very steady EPS growth curve, especially over the next few years as they increase those profit margins, and also a very healthy revenue curve as well. Looking very good, guys. And as you can see, you know, in 2027, analysts are projecting 12 billion. So I wouldn't be surprised if they are able to hit that 15 billion target in 2030. So everything's looking very good for the company here, guys. In terms of the valuation, revenue growth of 14.5% per year, very solid. EPS growth of 16% per year on average, which gives them I'm sorry, guys, I forgot to update the numbers right here. So let's just do them together, right? So post market price right now is 353. 353 divided by their 2024 ending EPS number, which is 558. So let's divide that by 558. Actually, they just reported this one. So let's do 2025 onwards, shall we? So they're actually, TradingView takes 2024. So let's do this one instead. Divided by 558 because they just ended their fiscal year, but TradingView does calendar years. So their PE ratio right now is sitting about a 63. So 63 at a first glance might appear a little bit high, but when we divide that by their EPS growth rate, you will see that they trade at a very, very rich PEG ratio right now. A 3.95 PEG, guys. That is very, very high for this company. And I would not be surprised, guys, if this is pretty much the almost fully priced valuation of the company right now. I would be hard pressed to find anybody that's agreeing to pay for Palo Alto shares at these prices, especially when going for a swing trade. It's just way too high in my humble opinion. Even if the company is growing very healthily right now, it is just very, very, very high for any company at that point. So Palo Alto, have to pause on it for me. I'm not really interested. We're getting to CrowdStrike at all-time high valuations right now. Not really interested up here, guys, but if for ever which reason we get some retests of the lower levels like we had just a few short weeks ago, maybe below $300, then I can get more interested in the company. But all the way up here, guys, it's just kind of not for me, right? The only cybersecurity play that I invest in, guys, in my own portfolio is a cybersecurity ETF, just because it takes all of the guesswork out of buying individual companies. We know the cybersecurity network, or industry rather, is very segmented. There's so many different players with so many different offerings, and they obviously have very complex offerings as well, right? So it's tough to be able to differentiate which ones have the better products, or which ones have competitive advantages against one another, right? So the only cybersecurity play that I have in my portfolio is this cybersecurity ETF. This company has, or this ETF has about 25 different holdings in it. Only pure play cybersecurity companies in this one. No Microsoft, no Apple, no filler names at all. Pure play cybersecurity. So I like the industry as a whole for growth. Probably the two best names in the business right now are Palo Alto and CrowdStrike, but unfortunately, both of them trade at very high valuations, which is why I don't mind owning them, but as long as I own them in the context of an overall ETF. So that's my analysis on Palo Alto Networks. Hopefully that helps out everybody who is interested in that one. Now let's jump right into our technical analysis portion of the video, shall we? So moving into the SPY. So SPY, no change here, guys. We're going to go through these very, very quickly because nothing has changed, right? V-shape engulfing move. So eventually, guys, we will be waiting for a little bit of a back test right here. How will we know that that's coming? Watch for the loss of the hourly time frame. This has been an hourly uptrend this entire time. So as soon as we lose this hourly trend into an hourly downtrend, you know that daily consolidation is underway. And then where could we possibly targeting? Well, down here in the support zone, guys, 545 all the way down to about 538, right? Prior support for the markets, prior resistance and support for the market. So big area of congestion right here. And all of your short-term moving averages are sitting there as well. That could be a likely area where the bulls take a little bit of a breather, reset, and possibly go for the daily uptrend shift, and maybe even completion of a beautiful inverse head and shoulders pattern. Looking very good on the weekly now as well. The weekly bulls have pretty much entirely engulfed the move. So even if we get a little bit of a daily downtrend leading into the next few weeks here, no problem. The bulls have tons of space to be able to set up for a weekly higher low for a possible weekly trend change back to the bulls. Everything looking very strong on the SPY. Onto the QQQs, same concept on the Qs, right? This is one single daily move. They never even stopped to reset into a daily uptrend. So full V-shape engulfing move. Eventually, we will be looking for a pullback here, guys. Just take a note at your 4-hour conditions are quite overbought right now. The RSI is currently sitting at about 76 on the 4-hour, and even on your 1-hour conditions too, right? We are very, very extended right here at the 81 mark on the RSI. So just keep an eye out for the loss of the hourly trend. When we get that loss of the hourly trend, you know daily consolidation is underway, and we may just be looking back down here, 467 down to about 457. This little range right here, prior support for the markets. All of your moving averages are right there. Looking for another possible inverse head and shoulders if we do pull back for the eventual rally higher. Now, also on the weekly is looking good. Very nice move. I wouldn't say it's entirely engulfing like the SPY, but almost a 75% retracement, which leads us to believe even if we do get some daily downtrend action, then we may just be looking out for a weekly higher low for possible further trend continuation back to the bulls. Now moving on to XLF financials. XLF financials also looking extremely strong. Daily uptrend is sufficiently underway right now, currently battling with the all-time highs. So in the event that the bulls cannot get through the all-time highs and have a little bit of a pullback, guys, just looking for a higher low. Anything above 42, daily higher low for possible further trend continuation. Keep in mind, we never really lost the weekly uptrend on this one. Now just a nice resumption of the weekly trend move and looking for a possible break of the all-time high. Possible break of the all-time high trade could be look to break, maybe retest this zone as the previous all-time highs, right? So we would need a breakout, retest, then we maybe have an opportunity for a long trade on XLF. Looking very good. My two favorite stocks, as usual, are Visa, number one, right? Still at a very relatively low area, and MasterCard, number two, both on very nice discounts and looking just to continue their monthly trend upswing. So looking very good on those two names. Now moving into healthcare. Healthcare, extremely strong, guys. New all-time high on healthcare once again, and healthcare as well, not really pausing for much, right? Did pause to set up for the daily higher low and now daily higher highs. So as soon as this move is topped out, how do you know a move is topped out? Well, just keep an eye, guys, on this hourly trend, right? If you lose this 12 EMA with an hourly downtrend in effect, you know that your hourly trend is finished and your daily consolidation is underway right now. So we just maybe be looking for a back test of your prior all-time highs. That is this green box right here, 151 down to about 150. The 12 EMA is also sitting right there. So could see a scenario where we get just a nice little back test and possibly move up for continuation of the daily uptrend. On the weekly as well, weekly looking extremely strong, guys, never losing the weekly uptrend amidst the entire dip process. But now we do have a decent little gap area right there, guys. So may just be a case in point at eventually the bulls probably will need to fill this gap right here. So once again, keep an eye out for a retest of that 150 for a weekly higher low for that potential weekly trend increase. Moving into SMH right now, semiconductors performing very nicely, pulling up into our area of resistance, 257 down to about 248, right? So this is going to be a nice little area of congestion. As of now, beautiful daily uptrend still in motion, but just keep an eye, guys, on your overextended short time frames. Your 4-hour is slightly overbought right now. Your 1-hour is also slightly overbought. So just keep a very close eye, guys, on if ever we lose the 12 EMA in a significant fashion and set up for an hourly downtrend in regular market trading hours. And that will give you an indication that your daily move higher is finished, and we may just be looking for setup for the daily higher lows. Anything above 211, just looking for that daily higher low for possible further trend continuation, and also possible setup for an inverse head and shoulders. If we retest down here, beautiful level of support. I'll be looking to trade this one myself, 237 down to about 225. The bottom, though, that I think the bulls maybe allow the bears get down into is maximum 230. So looking very good for some opportunities to buy if we do get that retrace. And on the weekly now, guys, the weekly also looking very, very, very strong right here. Right, so I'm not too sure why we're showing some big gaps here on my weekly charts. Right, I don't think those are real. That's kind of weird. Let me check the SOXX. Yeah, same thing. So I'll have to look into that. But these gaps right here are very, very weird because we don't really have any gaps up on the Monday sessions from prior Fridays. So all of that being said here, guys, on the weekly bounce is looking very good for the bulls right now. The weekly bounce, the size of it is just about 618. That's exactly what we're looking for here, guys, because then even if we now lose the daily uptrend and set a bit of a daily downtrend in motion, just know that we're looking out for a weekly higher low to possibly reset this weekly uptrend in the bulls' favor. Looking very strong. Now moving into IWM up about 1.22%. I wouldn't really say that the risk on trade is back here, guys, but just overall broad market bullishness is what's carrying this trade higher, right? So moving on in, daily uptrend is clearly in motion right now. Keep an eye coming up into resistance levels, 216 down to about 215. And if we do get rejected there, just looking for a daily higher low, anything pretty much above 203, looking for that daily higher low for possible trend continuation to the upside. Keep an eye down here, 210 down to about 208. This big resistance area should be acting as support for the bulls. So maybe a case in point where we just give a slight retest into this zone and then look to move one level higher. On the weekly, guys, well, the weekly bulls are fighting. I'll give them that, right? After losing the entire portion of the momentum, they've now come back roaring, right? So now we have a nice little bounce underway, almost to the 618 level. You'd like to see the bulls get at least up to that 618. That way, when we do pull back here, guys, maybe just looking for a higher low and then possibly a weekly trend increase back to the bulls again. And then maybe even starting to attack our 228, 230 levels once again. I would just be very careful on this one, guys. I still don't think that it's the proper environment for the risk on trade. Call me too cautious, but that's just the way I see things right now. Very likely that we get more volatility on the table in the next few weeks. Now, moving lastly onto the Dow Jones. Dow Jones up a healthy 0.58%. And there it is, guys. Fully V-shaped recovery on the Dow Jones as well. Dow Jones is in a nice daily uptrend right now. So you guys know as soon as this trend is topped out. How do you know it's topped out? Keep an eye on overbought conditions on the 4-hour. So far, not there yet. The 1-hour, though, definitely overbought, guys. 80 on the 1-hour on the Dow Jones. Usually that is where the Dow Jones tends to peak out. So if the Dow Jones, unfortunately, cannot break this all-time high resistance in this one single push, may just be looking for a daily higher low. Anything above 39,250, just going to be looking for that daily higher low for further trend continuation to the upside. Weekly, never lost the weekly uptrend either, guys. Weekly higher low is set right down here, 38.5, just looking for the continuation of the weekly uptrend. So everything looking very good in the indexes, guys. But as I said, I am very hesitant to chase these markets. That is why we have two portfolios. A long-term portfolio where there's days like this, where there's not many opportunities to the downside, right? Stocks that are selling off, Well, the long-term portfolio is just going to steadily move higher and higher and higher. And that way you don't have to chase things in your trading account, right? So that's the necessity about having two different accounts on days like this. Now, moving on down, let's go through our big tech names, shall we? So moving into Apple, same thing, right? I'm going to go through these quickly because not much has changed. Apple, now pretty much how many consecutive green days in a row has it been here, guys, right? What is this now? 11 days in a row, guys. That is very, very, very bullish for Apple. But as good things, as they say, all good things do come to an end, right? Keep an eye, though, on your hourly trend. That will be our guide. They tried to lose it here, but if I put my regular session trading hours, you'll see no real loss of the hourly time frame during regular market hours. Need to see a low, lower high, and lower low for that to be happening, right? But as of now, Apple looking very strong. We're battling with slight overhead resistance right now at about that 227. And the next one, of course, is at the all-time highs. So if ever Apple starts to roll over right here, we do have a decent amount of space, guys. Anything above 196, just looking for a daily higher low for possible further trend continuation. Also looking for a setup for an inverse head and shoulders on Apple. So I would be interested in playing Apple down here, guys, maybe for some call debit spreads. Not going to go too heavy because the valuation on Apple right now, I keep bringing this up, the valuation is very, very high on Apple right now, but could be a nice little swing trade opportunity on Apple right here if we come back into it, right? And that would be 219 down to about 215. Maybe some nice opportunities for the daily higher low for daily trend continuation to the upside. On the weekly, Apple doing a great job of trying to recapture as much as it can to reset into a daily, into a weekly uptrend as well. So in the event we even lose the daily trend right here, daily downtrend, just know that we're just probably going to be looking out for a weekly higher low for possible trend continuation to the upside. So Apple looking very good. I'm not going to be playing it heavy though, guys. If we do come down here, could be due for a little bit of a swing trade opportunity, but I'm going to be going small because where I like Apple more, even though we may not see it, I can't play this one with more size until we get back to the 210 down to about $200 range, which is pretty much a much larger area of support and where the valuation starts to be a little bit more manageable. Now moving on to AMD. AMD rocketing up to the upside, guys, 4.52%. AMD finally getting some of the love it deserves. Now pulling into this big area of resistance, guys. This is 162 down to about where we are right now, 155. We know it's been huge resistance in the past, prior all-time highs, and massive chop zone right here, prior support for the market. So stands to argue when we pull up into the 155, 160, we are going to have a challenging time to say the least. So if the bulls are not able to get it done, guys, at least we've created a lot of space off the lows here to have a pullback for a daily higher low for a potential trend continuation. So if they don't have the momentum to get this done in one clean shot and have to reset a bit lower, then maybe two-step this process. They have a lot of space, guys. Anything above 129, just looking for a daily higher low for further trend continuation. I would be waiting for this pullback myself as well because I really want to start writing some short puts under the $140 level, but I'm not going to chase this one to the upside. I had a bullish position on AMD today, but I closed it since it respected our trade. We took it all the way down here and we were targeting this area of resistance. And so when we pull into it, I closed the trade at a very nice profit. I'll recap that one at the end of the video. Moving into Amazon right now. So Amazon also looking not too bad either, 0.66% to the upside, looking like a very nice bounce. Take a look at the size of this bounce, guys. Not quite an entire V-shape just yet, but well over our 618 mark that we want to see, because now it gives the bulls an opportunity, if we do pull back, set up for the daily higher low for the eventual daily trend change. And where could we possibly pull back to on Amazon if we do pull back? Because we know we're coming into a slight area of resistance, right? 178, 180. So if we're not able to move past this and fill this earnings gap, well, then we may just start retracing a little bit and maybe head back down here, guys. 168, 170. The 200-day moving average is right there, and this is our most recent area of support. It's also where you bottomed out prior to the last earnings cycle, and also the bottoms back here after the earnings cycle before that. So I really like this lower area, 170 down to 168. That is going to be the area that I'm waiting for to place more swing trades on Amazon, possibly some leap calls, possibly some short puts as well, and maybe even some call debit spreads. I love Amazon. I love the valuation, and I love their prospects for the next year. Moving into Google right now, Google also performing very well today, 2.22% to the upside. Google setting the daily uptrend, looking very, very strong, and now starting to probably attack this level right here, 171 up to about 179, your big area of overhead resistance. So I like Google moving very, very well right now, but in the event that the markets are red tomorrow and Wednesday, let's say, well, if we do pull back on Google, going to be looking for a higher low. Anything above 159, going to be looking for that higher low for continuation of the daily uptrend, looking very strong. I love playing Google down here, guys. Short puts below 160 or at 160 or put credit spreads, anything like that does have my vote for a nice little swing trade right here, and even maybe some call debit spreads. I am in a call debit spread on Google, guys, but I got it down here, right? So it's tough for me to tell you to chase it up here, especially into resistance, but the one that we bought on the channel is moving quite well as of now. On the weekly still relatively muted move, right? We just now got the daily uptrend back, but on the weekly, the bulls still have a ton of work to do to be able to reset this weekly uptrend. So not out of the woods just yet, but I like Google, guys. The entire time that it's in the mid to low 160s, even 150s, I will be playing this one aggressively and even adding more shares to my long-term portfolio. Moving into Meta right now, Meta up about 0.35%. Decent day on Meta as a whole, guys. And now we are trying to use the bottom end of this big all-time high resistance. We're trying to do the good old breakout, retest, and then possibly run. So we'll see if Meta Bulls can get it done, but definitely looking good, guys. Nice daily uptrend by the bulls right now, trying to find the daily higher low for that trend expansion. So Meta right now, guys, I really do like the valuation. It's tough for me to tell you guys to buy it up here though, even though it's not financial advice, because on the channel, we've been buying it this whole time down here, right? So kind of tough to chase this one, but it does respect one of our criterias. The breakout, retest of the range trade and run is a good trade to take, but I would go fairly light on this one. Not going to chase it with too much capital, maybe only some put credit spreads below the $500 mark, or maybe even some call debit spreads, a couple strikes above here, just looking for that trend expansion, right? But I wouldn't be playing it with too much size, just because really back here was the level to go shopping out of, right? Go shopping with, right? But I'd be wary, guys, chasing anything in this market. SPY and QQQ now up 9-10 days in a row, significant rally. Usually you want to see the markets cool down a little bit rather than chasing these things. Even if Meta's valuation is very attractive right now, we still don't want to be in the business, guys, of chasing trades after they've ran 9-10 consecutive days in a row with the rest of the market. Moving into Microsoft right now, Microsoft also a nice green day, 0.73% to the upside, at Microsoft actually setting up the daily higher lows for the daily trend change. Take a look at this here, guys, right? This is why I tell you guys to watch the hourly trend change losses. Loss of the hourly trend, right? They did not lose, they did not set an hourly downtrend like they did back here the entire time of the rally. This is not the loss. Well, it is the loss of the hourly uptrend because you flushed the lows, but it is not a confirmed hourly downtrend with lower highs and lower lows. This is, right? So even though it was just a few short days, guys, that is right there, your daily higher lows as of today's trading. So now Microsoft setting up for the daily higher lows and going for the daily trend change. Keep an eye on this level of resistance we're about approaching right now, 437 up to about, 423 up to about 437. In the event Microsoft cannot get it done and gets rejected here, they'll be looking to protect these daily higher lows. If ever we lose these daily higher lows back into a daily downtrend, just remember we are just going to be looking to possibly set up for the possible weekly trend change. The size of the bounce on the weekly, guys, is not the best, admittedly, only about 40%. But if we do come down and back into this lower range right here, guys, this is where I love playing Microsoft. Anything pretty much 405 down to 395. You know, if we come down into here, call debit spreads, even something like put credit spreads below 385 could be very juicy. And if you have the capital, even short puts 390 and better. That's why I really start to get interested on Microsoft. We've added a lot of shares to the long term and even to the trading account while we were dipping. As a matter of fact, starting here all the way through the dip, and now we're pretty much just riding those bullish positions to the upside. Microsoft, I wouldn't say we're chasing right now, but I still would like to see a little bit of a discount. If you do come back down to about 4010, I'd be a bit more bullish in starting positions rather than starting them very close to this area of resistance after a 10-day SPY rally, right? But I like this one of my favorite companies in the game. If you're willing to add it to your long-term portfolio or make a swing trade attempt with some time on contracts, 2-3 months, I see no problem with that. Now moving into Netflix. Netflix, look at this rally on Netflix, guys. Absolutely fantastic. This has to be one of the best big tech bounces across the entire suite of names that we look into, right? 17% bounce in just a few short days. Looking very strong here, guys, right? So Netflix never stopping to set up for the daily higher low. This is one single daily move. So in the event we top out soon, which the daily conditions on the RSI are overbought, 4-hour conditions right now at about 75. So they are overbought, but not like crazy overbought. And on the 1-hour time frame, we've been oscillating between overbought and just fair in the last roughly 4 or 5 days of trading, right? So the bounce maybe is coming to an end, but just keep in mind, guys, getting close to the all-time highs, 695 all the way up to about $700 is your all-time highs. I mean, man, if we go from this brutal sell-off, right, into a V-shape to all-time highs on Netflix, that would just be crazy. But for me personally, guys, I'd be waiting for a little bit of a dip buying opportunity. If we do come down anything above 585, just looking for a daily higher low for further trend continuation, I would be targeting these lower areas, 654 down to about 630. Big area of prior support for the market here too. Could just be an ideal opportunity, and all the moving averages are there as well. Could be an ideal opportunity for a breakout, retest the range, and then maybe run for a second attempt at the all-time highs. Love Netflix up here at now 100% engulfing move on the weekly. So even if we lose the daily uptrend, guys, into daily downtrend consolidation, just going to be looking out for a weekly higher low for possible all-time high breakout pattern. Netflix, such a strong company. Now give me a second. And now let's do NVIDIA. So NVIDIA up 4.35% today. Phenomenal day by NVIDIA, guys. NVIDIA also having a significant bounce, right, since the lows. Take a look at the size of this bounce on NVIDIA. 42%. I mean, obviously better than Netflix, but I mean, NVIDIA is NVIDIA right now. Phenomenal bounce by NVIDIA. Congratulations to all the bulls who played it with us down here. Now, moving on further. Daily uptrend is clearly underway right now. So as soon as this move is topped out, and you guys know it's NVIDIA, right? 4-hour barely overbought. The 1-hour time frame is around 84, 85 right now. So we could maybe be seeing a little bit of a short-term topping out process on NVIDIA, considering the fact that we are also very close to the all-time highs, right? 130, 135, all the way up to about 140. But for all intents and purposes, price mostly traded 130 and 145. So if we could not get this done in one single move to new all-time highs, maybe just waiting for a little bit of a pullback here, guys. Where can we pull back to? Well, anything above 97 is just looking for a daily higher low. I would be targeting this area right here, 120 down to about 115. It is the big prior area of support that the market's reacted from nicely, and all of your moving averages are sitting right there too. So it could just be a case in point of waiting for a pullback. If we do wait for a pullback, guys, might be tempted for some call debit spreads into earnings, maybe some short puts below the 110 mark as well, and maybe even some put credit spreads a lot lower, maybe 100 down to 95. I do want to play an earnings run up on this one, guys, but I want to play it off a little bit of a dip and then moving into earnings, right? Usually when I do earnings run up plays, I'll usually do it about a week before earnings, and we're kind of getting to there now. So I'd like to see a dip over the course of this week if possible. Moving into Tesla right now, even Tesla not getting left behind today, 3.05% to the upside. So daily uptrend is clearly underway on Tesla, looking good. As soon as this move tops out, just gonna be looking for a daily higher low, anything above 194, looking for that daily higher low for possible trend continuation. Tesla, guys, on the daily MACD, look at this daily MACD down there, looking quite gorgeous if I do say so myself. Daily MACD is crossing over. Now, MACD is usually a bit slow, especially on the higher time frames, but, right, even if we get a little bit of a pullback, you guys know the bulls now do have the momentum to possibly continue this daily uptrend. Where are they going? Well, we're trying to recapture as much of this down move as possible here, guys. So far, decent move, but obviously not the best, barely up to about that 50% mark, but they have created a decent amount of space, guys. So in the event we top out right here at about the 230, 235 area of resistance and set to go a little bit lower, well, just know that the bulls will try to make a weekly trend change attempt as a whole and get that weekly uptrend back. Personally, myself, guys, I can't really be playing Tesla right now. I don't think the fundamentals are the best for the company. Yes, it can stand to gain because interest rates are coming down, but keep in mind that won't have a direct effect on their demand just yet. So we may have a temporary boost in share price, but the actual demand of the company, right, the fundamentals won't probably catch up for a while. So as I said a few weeks ago, guys, I'm only really interested in playing Tesla if I can get some short put opportunities below 190, right? Think 185, 180, 175, but I do not want to chase this stock up here at all. Even though I like this company, I like their products, we just have to be realistic, and the fact that this one is just not very favorable for the markets right now, right? So I like the volatility on this one, but I have to get lower, right? When we had this dip right here, I played one Tesla contract down here, but that's pretty much it. That's the only time I played it recently. Moving into Palo Palantir right now. Palantir 1.31% to the upside, looking extremely strong still. Palantir is quickly approaching, guys, our next level of resistance, which is pretty much going to be the $35 level. And after that, there's not much for the all-time highs, guys, but 35 is definitely on the watch for the bulls right now, looking extremely strong. Now, in the event Palantir cannot get it done and we start rolling over here, guys, we have tons of space. Anything above 21.25, just going to be looking for that daily higher low for possible trend continuation. Where do I want to find Palantir, guys? I'm waiting for maybe some weekly retests as well. Even with that daily retest, we covered their earnings. Their earnings were very good, but at $32, guys, their PEG ratio is extremely high. You are paying top dollar for Palantir. I'm not saying they won't grow into the future, but paying these high valuations, guys, right, is never a good risk to reward proposition. Even if the company can continue running, guys, it's just not a good habit to be developing. So I would like to find Palantir back down here, $29 to $28. If we can come down on the weekly, retest $29.28, I would be tempted to make a few short swing trades right here with probably short puts and maybe even some call options for the future there, but need to wait for the breakout retest pattern. It's one of my favorite patterns here, guys, but you just need to be patient for it to manifest, right? These things always do come back. Even after this monstrous rally, you can obviously see some pullbacks and then the stock just consolidates, right? So I've been waiting for that consolidation in these stocks and also maybe some consolidation in SPY and QQQ, which could help bring Palantir back to our buy targets. But all in all, the bulls are looking excessively strong, in control of every single time frame. Monthly time frame control, clear as day. Weekly time frame control and daily time frame control as well. That's pretty much everything we had for our stocks rundown today, guys. Hopefully you appreciated that. A few of the names before we jump into my portfolio, a few of the names I'm going to be looking to swing trade shortly. Obviously, you guys, I gave you a bunch of them last night in last night's top 5 options video. But SoFi, if SoFi can retest the $7 range right here, I will be looking to maybe play some short puts on SoFi, maybe even some call options, maybe with a bit of time on them, 3-4 months out. I like this company. And now that we've broken back out of this big $7 support zone, if we retest it, I'll be looking to play it at the $7 range. CLH is getting very interesting for a little bit of a rebound play right here. I'm being greedy for my short puts, but maybe even some call debit spreads. I want to play this one, but I want to stay conservative. So maybe some call debit spreads with a couple months of time could be a very decent play. Those are just for a few of the growth names out there. MSCI, I like this company, but it's severely trailing its industry peers. As you can see, Moody's Corporation, some of these aren't directly correlated, but they get lumped up in the same industry. Moody's Corporation at the all-time highs, SPGI at the all-time highs, but one of their direct competitors, MSCI, still kind of struggling right here. And what I like to see is that this one is, well, obviously the company needs no introduction. We've talked about it many times on the channel. Extremely high quality growth, well, not growth, but extremely high quality, profitable, predictable, and consistent company. Price targets are for the most part all above the stock right now. It's been consolidating in these ranges for the past 2 years of trading, guys. So I am looking for the potential breakout with some shares, guys. We had this one back here. We played a decent amount as well, but now I'm looking for more. Any retest here, I will probably be looking to play it into, even if we're heading into resistance, guys. I think it's just a question of time before this monthly uptrend gets back in motion towards the all-time highs. Vici is another trade that, I have this one in the long-term portfolio, but even right now, even if it has rallied off the bottoms, it is looking quite good. I like this one a lot, guys. Should be very strong, and we're trying to get an attempt for a second leg higher. This one is going to respond well to interest rate cuts and has been responding well so far. Even the dividend, guys, is still a very healthy 5.25% yield even at these prices, and we're still not really close to the all-time high. So I like this one for monthly trend recapture and expansion. And the last one I'll be looking at, guys, for maybe some swing trade positions with some shares or something like that, is Booking Holdings, right? Booking V-shaped recovery from their earnings, daily uptrend confirmed right now. So if we pull back here with a overall market pullback, I'm going to be looking for Booking as close as I can find it, guys, to about $3,500. If we can find $3,500 again, maybe $3,550, I'll be looking to make a little bit of a swing trade attempt right here for possible trend continuation and weekly trend recapture as well for such a beautiful company. But once again, all of those plays, guys, kind of waiting for SPY and QQQ to pull back. So now let's get into my portfolio for the trades I did make today. All right, guys, so taking a look at the portfolio right now, before we go over a few of the trades that we do have for today, let's go over a few of the ones that we closed. So number one, we did close the AMD bull call debit spread that we had right here, the 150 versus the 155s. Now, even though Interactive Brokers does say that I close this position, guys, it leaves them independently and it doesn't give me the ability to disclose the entire profit. But all you need to understand, guys, is today we sold them for $2.50. We bought them for $1.69 each. So 169 minus 250, we made about $81 per contract. We had two of those contracts, as you can see right here. So we made about $160 total, guys. This position has been on for approximately the past 2 weeks and has performed very, very well, if I do say so myself. So just closed some profits as it was approaching our resistance area, that 155, as I was talking about earlier on in the video. Now, also, guys, I did close the last TLT call position too. So this TLT call we bought just about a week ago at this point, right? So you can see right here, we bought them on August the 8th for about $3.83. And then we closed them today for about $471. So all in all, very decent sized profit, right? Not quite $100, but $90. And it's just about the ROI, right, guys? It's all about the ROI. Don't focus so much on the dollar amount. This, in terms of the ROI, is about a 23% return in a very short amount of time. So happy to take that, especially on a bond position. And those are pretty much all the trades that we closed for today as a whole. Now, in terms of the ones that we opened, guys, there wasn't that many because, as I've explained, I do not want to chase the market. So today, when I went to my list and I looked at all the securities that were red, there was really not that many. And the ones that were red, they didn't have very substantial declines. So I did go shopping with some of the ones that were red, but I kept it very, very, very light, guys. I'm going to wait till tomorrow or Wednesday to see if we do have a red day to deploy more of this buying power. Now, in terms of the ones that we closed right here, give me a quick second. Let me turn these off. All right. So now in terms of the ones that we opened today, well, we got some alimentation puts as well. The $80 puts, we got about 60 cents for the minus commission, which is well above our 0.5% rule. This one, I keep talking to you guys about it, right? It's a Canadian company. You guys might not know so much about it, but they do own a number of convenience store chains in the United States, gas stations as well. Very big company in Canada. And look at the long-term chart, guys. The management team of this company is so good at executing and keeping profit margins high and just overall operating efficiency of the business. So I went very conservative, guys. They just had their earnings they didn't have their earnings today. They put in a bid today. The reason they dropped very, very hard off the open is they put in a bid to buy a Japanese convenience store chain right here. So I figured that I should take advantage of it the most. You can see I wasn't able to get the early morning pricing. It did gap down about 4% right there. So I tried to recapture it, guys, when we got a little bit lower right down here, at about the 82.5 mark. So that's when I actually wrote these contracts. So we have those for the $80 strikes. Now, $80 is relatively close to the stock price, but the most important part of this, guys, I do not mind being assigned at these prices, which is why I'm writing them, right? We are looking for the weekly trend continuation. These are the weekly lows, prior weekly resistance, newfound weekly support. The moving averages are right here. I would not mind being assigned at 80. It's a little bit closer than we're used to, but still a defensive company, great company. I like this position a lot. Now, the only other ones that we added, you can see everything else is still here in relation to what we had last Friday, right? So no real changes. Still the Bitcoin swing trade positions, the John Deere contracts for December, the Disney swing trade positions that we opened early last week, the EVVTY swing share position that is going very, very well, up 7% in literally just a week of trading. So doing very well there. We still have our Google position too. This is our Google long position as well. The October 170 versus 175 debit calls. So you can see, guys, we're already up $100 on that position. Those are going extremely well too. Now we did open positions today. We opened the Domino's Pizza bull put credit spread. So put credit spreads on them, 410 down to about 405. The reason I chose those strikes, guys, is because Domino's Pizza was one of the most read companies on the day today. And 410 down to 405, guys, that is pretty much the earnings crush. I would be highly surprised if they get down there in this 1 week of trading. For me to lose money on this trade, guys, Domino's Pizza would have to go down an additional 5.5% after already being down 2.5% today. I don't think it's very probable, which is why I am taking that trade. We were compensated nicely for it, guys. in terms of that Domino's position, right? So we got about, where is it? We got about 15 cents here to do that. But 15 cents divided by 500 bucks, guys, that's some decent ROI. That's about 3% for the week. So we'll see how those play out too. Thereafter, guys, we still have the Intel position. That was not touched. That's moving very, very well so far. We have the lows. Now, we wrote the lows, $220 contracts. I'm not too sure why it says $0 puts, but this was purely an earnings play as a whole. So Lowe's has earnings tomorrow. The expected move on Lowe's, as you can see right here, was about 3.8%, right? So we went double that. We went with twice the expected move, as we usually do when we try to play earnings. We went with the $220 strike, which is about 9.5% away. We got some decent premium on it, just being 2 standard deviations away. We got, as you can see right down here, 32 cents, right? So we're going to be looking in and out of this trade by tomorrow morning. Decent position there. We also did the MDT for earnings. This is Medtronic. So them, company in healthcare that I do like a lot as well. At the $80 strikes, we're providing some good premium. $80 is really close to the bottom end of the support range that we've been having pretty much over the last year and a half's worth of trading. So we'll see how that one goes. I would not mind being assigned at 80, but once again, this is an earnings play, so we do look to close this tomorrow. We got about 21 cents on those, so not too bad. That is also 2 times away from the expected move. Then I did open another swing trade position, guys. MRK, so I like this one a lot. MRK, just same concept as the other one that we're in, McKesson. So coming down, sorry guys, had to sneeze. So coming down into the into our big range of support right here is Merck, right? Big area of previous resistance should be support. And we're looking for the daily uptrend recapture. So now that we're going for it, guys, I did take a position here today. The stops go below our lows right here, around just below 111. And we are targeting the upside 121, 123, which is our big previous resistance area above us right now. So probably a longer duration swing, but I like this one a lot coming out of daily oversold conditions too. And also being under all of your moving averages, especially that 200-day moving average. I like the bit of mean reversion capacity for Merck right here. So that one was a new swing trade. Very tiny position, guys. I'm only doing a lot of these with $1,000. I could do a lot more, but it's just to show you guys that even when we're not using a lot of capital, we focus on the ROI and the risk to reward of each trade. That's the only thing that matters, right? Now moving down, also did a bull call debit spread on Merck. Same reason why, same trade, just using options for this one. We went with the 120 versus the 125 bull call debit spread for the month of October. So 2 months left on that one. Paid about 91 cents. Going to be looking to close these at $2, roughly $2 if we can move up into those strikes. Microsoft's doing well, no additions there. And the only wheel trade we went with today, guys, was Micron. Micron 101 puts for about 50 cents early on in the morning. Micron was down about 0.5%, right? So we went for Micron because everything else was running except for Micron. So Micron, looking back here, guys, the 101 would be just about here. Now, it's not a tremendous amount of dip, but it is a nice little dip that I'm looking for the higher lows for continuation of the uptrend. So 101 wouldn't be mad about being assigned here, but once again, went light with only one contract. Then further down, guys, we got the Palo Alto short puts, 290 puts for earnings. Those will be completely worthless. That was 2 times the expected move. We got compensated nicely for them. They were all the way down here in this big level of support, plus 2 times standard deviation. So tomorrow we will be happily collecting all of this $136 in our pockets. And then we also went with some swing trades, or some wheel trades rather, on United Steel Corporation, which is the $37 and the $36 puts. I got some great pricing on these guys. Basically, the only reason that this one dropped so hard at the late afternoon, guys, I got this one pretty much in the last couple minutes of trading. The last 15 minutes of the day, I found this opportunity after it started. It all started when Trump was speaking, right? Just around here in the middle of the afternoon, Trump was speaking and he said that he would veto the United States Steel Corporation deal. If you guys don't know what that deal is, essentially, guys, I think I had a slide up here, but I think I must have closed it so far. So there's a company in Japan called Nippon Steel. They had offered to buy United States Steel Corporation outright in cash for $55 a share. When that news came out, that's why they had that massive rally right here. But obviously, it's an American company, and Nippon Steel from Japan is Japanese. So Trump wanting to keep this company, quote unquote, American, right? That's the reason why he said that today. He said he would veto the deal if elected, meaning he would cancel this deal, essentially, of Nippon Steel buying United States Steel at $55 per share. Now, obviously, we do not know if Donald Trump is going to be elected as the next president of the United States, right? So this news right here is just speculation, my favorite type of news. So whenever we get speculation news to the downside, I usually just take the other side of that trade. So we were able to lock in some decent levels right here at around the 37, as you can see, right, all the way down here, 37 and 36.5s, which would be crazy drops, right, guys? That would be an additional 5.5% for the 37s, an additional almost 7% for the 36s, which would put us at the lower end of the area, guys, as well. But keep in mind, we do have a tender offer to buy the company up here at 55, right? So I do think that this area should last as support for the foreseeable future, which is why I took the trade. That's pretty much everything we had, guys, for today's video. Hopefully you guys enjoyed that. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. Would love to have you back here. We do these videos every Monday to Friday after the close. And lastly, guys, if you have any questions at all, please feel free to leave them down below in the comment section, and I'll get back to you within the next 24 hours. And last thing, guys, about the Discord service that I'm launching here soon, right? So it is ready right now, but I had some hesitations as for launching it on a Sunday night. Obviously, you guys know that a good portion of the Discord is going to be for buy and sell alerts and stuff like that. And I just didn't think it was very fair if I launched it on a Sunday night just before a new week without many people knowing, because I haven't really advertised it much on the channel so far, right? So moving forward this entire week, I will be advertising the new service that we're launching here together, right? The Discord service. And which will allow a lot of people to prepare for that service. And that way I'll be launching it officially public live either Friday or Saturday night. That way we can spend the weekend in the Discord having conversations, and I'll set the expectation as to what we're going to get. There's going to be some private live streams as well that are included in terms of pre-market live streams too. Obviously the trade alert signals and many other different things. So just to give you guys enough time, right, to explore the service and whatnot and get ready for the new week of trading. That's why I'm going to just postpone it ever so slightly and kind of advertise it on the channel a little bit at the end of the videos over the course of this week for all of you that are interested. But I just wanted to be fair, you know, for the people who might have seen it only, let's say I released it last night, very late last night or something like that, and you didn't see it, maybe you only see it by Tuesday or Wednesday, and by that time, you know, a good portion of the week's trades have elapsed so far. So I just want to be fair to everybody and launch it at a optimal time as well to give people an opportunity to get in and prepare for the schedule and everything we're going to do there, right? So take care, guys. Hopefully you had a good day of trading. I will see you tomorrow after the close. Peace. Love you guys.